Welcome everyone, and thanks for joining us. My name is Damian Gallagher. I'm with Emerald Advisors, and today I'm joined by Stacey Sears. And Stacey is a portfolio manager on our small cap growth strategy. And the team did a really good job navigating markets through the second quarter and really through the first half of 2024, which led to outperformance for our small cap growth strategy. So we're going to jump right in and start with the first question, which was, what were the main factors that contributed to outperformance in the second quarter for the small cap growth portfolio?
I think, one of the most encouraging things from our perspective, especially given, the weaker start that we had to the year, with our challenging first quarter financial performance, is that we were able to claw that back plus some, and it was largely driven by broad-based strength in stock selection, which was an encouraging sign in that we were able to outperform within industrials, materials, technology, healthcare, financials. The only area of challenge inside of the portfolio, which partially offset some of that strength, was consumer discretionary. So I think in aggregate, the team did a really nice job of identifying the secular growth opportunities within those sectors, and the portfolio was positioned to benefit as the earnings growth came through in the second quarter.
All right. And were there any tailwinds from the market that really just led to outperformance?
From a factor perspective, I think just a couple of things to highlight. From a stock picker, when the market is very much driven by idiosyncratic factors and that we see pairwise correlations come down, the market's less focused on the macro. That's historically been a tailwind to performance, and we did see that over the course of the second quarter, which means we were getting more benefit from our stock selection. So I think that contributed to the outperformance. And then at a higher level, I would say a couple things to mention there. We refer to work done by Jefferies Research. They do a great job decomposing the constituents of the Russell 2000 on a quarterly basis, and are able to identify the factors that are driving outperformance, whether that be return on equity, sales growth, market cap, etc. And I think what was notable about this quarter, historically as a small cap growth manager, our style does best when growth is being rewarded in the market. And how that historically has translated is outperformance of those fastest growers, say the top two quintiles inside of the benchmark, as measured by sales growth on kind of a rolling 1 year forward basis. And I think what was notable about this quarter, two things on that front. One, we did see those fastest growers actually underperform that top quintile, which I think is interesting. But even though we saw the fastest growers underperform, there was still a trend towards growth in the marketplace, because you did see nice relative outperformance in quintiles 2 and quintile 3. So I do think, even though we didn't get the benefit that we would have historically gotten from the fastest growers participating, the fact that we saw the trend towards growth be sustained and the Russell 2000 growth continue to outpace the Russell 2000 value, I think that was somewhat of a tailwind to performance during the course of the second quarter. And then maybe one offsetting factor to that, and that's a structural standpoint from maybe how we're positioned relative to the market from a market cap perspective, is that historically when you see the largest companies outperform the smallest, as we did in Q2 with the S&P outperforming the Russell 2000, the Russell 1000 outperforming the Russell 2, that translates to performance inside of the Russell 2000 benchmark. And what I mean by that is that you'll see the largest market cap companies outperform the smallest, very much in the same way, inside of the benchmark from a construct standpoint. So we did see that again this quarter. Where Emerald is positioned on a relative basis, we have been underweight the top quintile of from a market cap perspective. So the portfolio leans a little bit smaller than the benchmark overall. So in that regard, the distribution of returns inside of the benchmark were a little bit of a headwind, because most of the performance was had really in kind of quintile 1 and quintile 2. The balance of the quintiles actually underperformed from a market capitalization perspective. So I would say mixed. I wouldn't say that there was, huge factor impacts driving that were either a tailwind or a headwind. to performance this quarter. Again, really very much, I think for the first time in a while, we can say it was, very much stock selection driven and very broad-based.
Well, thank you, and great job to you and the rest of the team, and thanks for all that you do for us. We'll wrap things up. I hope to get back to work, and thank you so much for tuning in, and hope to join us again for the next update.
Okay, thank you.